Good morning, and welcome to yet another edition of Macro Now, set to be released every Monday morning. My name is Alexander Turro, Senior Market Strategist here at RJO Futures. We're going to be contextualizing the rates of change of growth and inflation. So with that said, we'll start with the global currency market. The dollar week over week is down minus 0.8% to a big lower high within its bearish trend. The euro versus the US dollar was up plus 0.9% last week to a big lower high and remains bearish trend. The yen versus the US dollar was down minus 0.3% last week and is up 0.5% in the last month, but remains bullish trend on a 90-day basis. You have the British pound versus the US dollar up 0.8% last week, but it's signaling immediate term overbought. The US dollar just continues to have strong inverse correlations, not only with the SPYs on a 90-day trending basis of minus 0.90, but also with gold of minus 0.93, including the CRB index of minus 0.78. That's with the CRB index reflating 5.3% last week to lower highs as you have the US dollar selling off to higher lows. The oil market in WTI reflated a big 9.6% last week. That's after deflating minus 8% in the week prior, but remains bearish trend. It was teetering that bull bear line at around 41 or so, but is down nearly 3% on the day today and remains bearish trend, with oil volatility indicating a move perhaps up into the 50s. Copper was up 3.5% last week, but is signaling a lower high at $3.08 a pound. If you're moving across asset allocations here, you have the U.S. 2-year yield was up 2 basis points last week to 0.15%. The U.S. 10-year yield was up 7 basis points to 0.77%. And high yield spreads compressed minus 41 basis points last week to 469 over treasuries. And following up with the 10-year yield, per the risk range, the 10-year yield has not moved within the last couple of sessions between 62 and 81 basis points, indicating that the volatility component of interest rates, the MOVE index, has continued to remain subdued, which is bullish for treasuries. Notwithstanding this tremendous consensus net short position of nearly 422,000 contracts in 5-year treasuries, which brings us to our last point here. We have a precarious point for risk assets right now as U.S. equity volatility continues to remain elevated, as all 3 equity indices in the S&P, the NASDAQ, and the Russell 2000 all remain bearish trend. And if you break down some of these tech bellwethers in Apple and Microsoft, they are currently building an implied volatility discounts versus 30-day realized, meaning that there's a tremendous amount of complacency by the bulls and capitulation by the bears. So if you have any follow-up questions, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.